Hello and welcome, dear traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And today is August 14, Monday. We're gonna start with the majors: Euro dollar pair and pound sterling dollar pair. Evangelos Polakis helps us with the draw of pivot points. Last week, bullish traders on EURUSD failed to capitalize on the apparent rebound. As a result, the market closed with a bearish sentiment below the accumulated levels in the region of 1.0986, 1.1001. If the bears manage to update the low of the current slowdown, 1.0913, their focus will be on testing the weekly medium-term trend, 1.0898. Subsequently, their objective will be to break through the daily cloud of 1.0864 and to eliminate the weekly gold cross 1.0805. Reinforced by the monthly short-term trend 1.0835. If bullish activity returns, it will be important for them to break through the resistance of 1.0986, 1.1001. and eliminate the daily Ichimoku cross 1.1094 and 1.1137. Currently, the advantage lies with the bears. Targets for the development of bearish sentiment today are located at 1.0924, 1.0902 and 1.0861, supports of classic pivot points. The key levels of lower timeframes currently serve as resistance at 1.0965, central pivot point, and 1.0978, weekly long-term trend. Breaking through which will affect the prevailing balance of power. Further recovery of bullish positions during the day is possible after surpassing resistance of classic pivot points 1.0987, 1.1028 and 1.1050. Last week, on GBPUSD, the market did not manage to exceed the range of the previous week's candle, as the trading range was insubstantial. Consequently, the main tasks facing the market retained their significance. For new bearish prospects, the market needs to overcome the support of the daily cloud 1.2663 and 1.2577, strengthened by levels of higher timeframes 1.2597 and 1.2629. For the bullish scenario to unfold, the bulls need to establish themselves above the daily short-term trend, the red line on graphic, 1.2717, and continue rising towards other resistance of the daily Ichimoku cross, 1.2819, 1.2881, and 1.2942, which are currently reinforced by the weekly short-term trend 1.2865, and the lower border of the monthly cloud, 1.2893. Liquidating the daily cross and securing firmly above the support of higher timeframes will open up other bullish targets. Bears currently have the advantage on the lower timeframes, but the market has been lingering near key levels for a long time, interacting with them. Right now, it's testing the resistance of the day's central pivot point, 1.2697, followed by the weekly long-term trend, 1.2724. Establishing above the moving average and its reversal can alter the current balance of power. Additional intraday reference points today are resistances of 1.2730, 1.2769, and 1.2802, and supports 1.2658, 1.2625, and 1.2586. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Petar Yukimowicz. Gold has been trading upside this morning, and we found rejection of the intraday support at the price of 1910, which is a good sign for further upside movement. Due to the potential exhaustion of the sellers and rejection of the support 1910, Petar sees potential for the further growth towards upside references. Upside objectives are set at the price of 1920 and 1927. Stochastic oscillator is showing oversold condition and fresh bull cross, which is good sign for the further upside movement. Intraday support is set at the price of 1910. What about the USD-CHF currency pair in medium term? Arif Makmur describes. On the weekly chart of USD-CHF main currency pairs is currently under quite strong selling pressure, which can be seen from the CCI indicator, which is still moving below the -100 level, and below WMA20. Even though currently USD-CHF is corrected up in order to gain momentum to continue its decline, which is important as long as the upward correction does not exceed above the level of 0.8917. Then the opportunity to continue the decline for USD-CHF is still a big chance, and is even predicted to reach up to the level of 0.8551. And finally, here's Lowry Bailey with AUD-USD pair focused. Let's have a look. After a false upward move on August 10th, the AUD-USD pair continued to fall in the medium term. The support level at 0.6388 is just ahead, creating a magnetic point through its intersection with the green price channel line. The Marlin oscillator is moving downward in the bearish territory. There are no visible obstacles as the price makes its way to the 0.6388 target. On the 4-hour chart, the price has settled below both indicator lines. The balanced line, red line on graphic, and the MACD line, blue line on graphic. And with the support of decline in Marlin oscillator, the downward movement persists. A correction is highly likely after reaching the target level of 0.6388. That's all for today. See you online soon. Good luck.